Hello, everyone. I'm Bush Bakani from UN Environment Program. Welcome to the fourth and final event of the PSI-Swiss Re International Virtual Event Series on Stable Leadership in Insurance. And the topic for the day is aligning insurance portfolios with the Paris Agreement. I think we truly have a global audience today. I think we're expecting to match, if not exceed, the numbers we had for the third event of 700 plus participants from 60 plus countries worldwide. And so it's a very interesting moment in time. The seasons are changing. If you are in the south, winter is coming to an end. For those in the north, like us here in Switzerland, summer's over. So welcome again to everyone. We'll go into the content straight away, but before that, I'd like to deal with some housekeeping issues. So first of all, there will be an online poll survey that we will conduct for each of the sessions. And we will also have a Q&A segment for session 1 only. That's after the leaders dialogue, just to maximize the time. But to make it interactive, you as participants can participate in the 3 online surveys that we will conduct, plus the Q&A for session 1. And to do that, there is below the video screen on the Swiss Re website, you can simply click on the Q&A tab for the questions, and then the poll tab for your for the online poll questions. So now, let's get on with the agenda at hand. So as I said, this is the fourth and final event. The first event was focused on the COVID-19 and the agenda of how this relates to the global sustainability agenda. The second event we had was about managing downside sustainability risks in insurance transactions and the launch of the PSI Global Guide. The third event was about really focusing on upside opportunities in terms of insurance products and solutions and how they can support the SDGs. And then this agenda is about aligning portfolios with the Paris Agreement. So as we know, addressing climate change entails 2 things. That means coping with the physical impacts of climate change, which is adaptation, and also reducing greenhouse gas emissions, which is the mitigation agenda. And adaptation and mitigation are 2 sides of the same coin. And today we will focus a little bit more on the mitigation side of reducing greenhouse gas emissions. So without further ado, I'd like to go to our leaders dialogue, where we'll have 2 speakers. Ovais Sarmad, the Deputy Executive Secretary of the UN Framework Convention on Climate Change, and Eddie Schmidt, who is the Group Chief Underwriting Officer of Swiss Re and also the Chairman of the Swiss Re Institute. And I'm going to now turn over to my fellow moderator, Ivo Mensinger, to kick off this discussion. Ivo?
Thank you so much, Butch. We agreed that we would take turns in fielding questions, so I will be allowed to field questions to Ovais, and Butch will do so for Eddie on the insurance side. So, Ovais, my first question: it's been about 5 years now that the international community developed and agreed on the Paris Agreement, and my question to you is, how do you think we are faring with respect to achieving these objectives, and what does the latest science actually tell us?
Thank you very much, and first of all, welcome to all participants, and thank you for this opportunity to participate in this extremely important, timely and relevant dialogue. And I'd like to at the outset thank Uneps, Swiss Re and PSI for bringing us together. So with regard to your question, that is a very relevant question. And let me share with you right at the beginning that the constituency that we are engaged with today, the insurance industry, it's an extremely powerful in the context of financing the world. in which we live, operate, and manage our risks in many different ways. So insurance industry has an important and extremely relevant role to play in managing the climate emergency that we are all facing. So you asked the right question, what has happened in the last 5 years? Why last 5 years is 5 years ago is when the Paris Agreement was adopted and unanimously by 193 countries ratified. It's one of the few multilateral global agreements that has had that kind of very rapid ratification and endorsement by almost all countries around the world. So what has happened since then? Unfortunately, not that much, not in line with the targets that were set up by the Paris Agreement, which the main target is to keep the global temperature rise well below 2 degrees, preferably 1.5 degrees above pre-industrial levels by the end of the century. But unfortunately, as of today, we are already 1.1 degrees above the pre-industrial levels. And if we go on this trajectory, unfortunately, by the end of the century, we will be double the percentage degree that the Paris Agreement had set as a goal. And that, my friends, is a very serious issue. And that will lead us to a world which cannot be insured. And so in order to get to that goal and to keep the global warming in line with the Paris Agreement goals and targets is that we need to really cut our emissions, the greenhouse gas emissions, by almost 8% each year from now until end of 2030 if we are to meet that 1.5 degree target. So that's where we are. And unfortunately, and I really hope everyone is safe and not affected by the COVID crisis that we are all going through. And COVID has affected all of us, all our lives, all our ways of working, all our businesses and organizations, and in every different way. But the most important thing here, and a reminder, is while there is a huge race to address the implications of COVID through a search for a vaccine or a treatment, unfortunately, climate change, the impacts of climate change, they cannot be a vaccine or a treatment for it. So we really need to focus our attention in looking at the implications of climate change. So what's the role of the insurance industry? You are the experts in understanding and pricing the climate risk. And there is a huge scope for better climate-related risk management across the industry and awareness on the clear purpose on how the industry can contribute to the attainment of the Paris Agreement goals. And we need the industry leadership, and I'm very, very pleased to note that Swiss Re has stepped up to showcase, to be the beacon of hope in this regard. And you have a lot of potential to promote good practices. And we need innovative and transformative solutions in regions where insurance is not as widespread as in many of the Western countries that we are operating in, especially in LDCs, the least developed countries, the small island developing states, and many of the global south. Insurance is not that widespread in terms of ensuring the risks, both for climate change implications and others. So the insurance and reinsurance companies need to work in smaller emerging markets. This is an important area where CEOs can reinforce within the boards of their organizations. So I hope that gives you the context and the areas of focus that we hope the insurance industry and the CEOs can focus their attention on. Over to you, Evo.
Thank you, Evo, for that impressive call for action. If we take a little bit of a closer look at the insurance industry and what we can contribute, and maybe even start by looking a little bit back into the past, the journey we have been on, I think it's fair to say that the industry has been one of the first to actually point towards the relevance of climate change and the importance of climate mitigation as well as adaptation. And there have been developments and innovations such as climate risk facilities for governments or microinsurance for climate vulnerable people, or then the support through insurance products that actually mitigate the risk for, let's say, renewable energy. And more recently, I think another really important development took place in that a growing number of insurance companies, leading insurance companies, have actually announced that they will transition their investment portfolio by 2050 to net zero, in line with the 1.5 degree Celsius target of the Paris Agreement. Now, the topic of today is actually taking this engagement of the insurance industry and the journey a little bit further. Now we are talking about making the underwriting portfolio, so the core of what we are about as an industry, and to align that with the Paris goals. What is your perspective on that?
Thank you very much again, Ivo, for that perspective. Let me start by saying that 2-degree planet, as I mentioned, is not insurable, right? And even if 1.5 degree warming, there will be huge implications for the insurance industry. And here is an important call for action. We know, and especially in our organization, UNFCCC process, we recognize and we acknowledge that governments cannot drive the green recovery or tackle climate change in isolation from the businesses, the industry, different industries, and civil society. And we have coined a term which refers to as inclusive multilateralism, which means that everybody needs to be engaged and involved, and so in a way, all hands on the deck. For example, we recently launched the Race to Zero campaign, a global campaign to rally leadership and support from businesses, cities, regions, investors for a healthy, resilient, and a carbon recovery that prevents future threats. And I'll talk about that a bit later, but for right now, let me share some thoughts on the insurance industry. The insurance, as you all know, gives the countries and the insured a certain cushion until reconstruction and recovery can start. And payback or payouts can be relatively quick and non-dependent on different considerations. So the insurance industry has an extremely important role. And what insurance industry needs to do is to take, and I don't want to sound like preaching, but it's very important, and this is very obvious, take a longer term view. Insurance policies are often, unfortunately, renewed on a short-term basis. But those policies that need to be put in place have to be in the context of carbon-intensive infrastructure, or to not insure that infrastructure which is carbon-intensive. And to share knowledge on how climate risks are integrated into the models driving insurance provisions and premiums. And to share information on how insurance policies are climate-proofed and how to ensure that they are within reach of the areas and the constituencies that I mentioned. And finally, to explore new products to address emerging understanding of the climate risk for insurers in the case that climate risk is being a transboundary relationship. But having said that, I really wish to also applaud the insurance industry, the leaders, many of you who are online today, that have shown a growing commitment to the net zero emissions by 2050 by aligning their portfolios, as you just mentioned. But we also like to encourage everyone to advance this agenda even more towards the transformational change that we all need. We know it's not easy, but this is courage this is where we need the leap of faith to enable that transformation, to scale, and to provide the solutions to propel that transition. And therefore, we encourage everyone to actively signal that you're concerned that the risks of climate change is a serious, significant threat to our societies. Thank you.
So let's hear directly from a representative from the insurance industry. Butch, over to you.
Yes, thank you, Ivo. Thank you, Ovais, for that insightful comment. So it's my turn to cross-examine Eddie Schmidt of Swiss Re. Very happy to ask a question for Eddie. So Eddie, I think what Ovais has just highlighted to us is that there is, at the highest level of the UN, at the UN Framework Convention on Climate Change, there is an unequivocal support and recognition of the role of the insurance industry in climate change adaptation and mitigation. And so the agenda is as simple. If we want to have a chance to meet the 1.5 degree target of Paris by 2100, we would need to bend the emissions curve now and achieve net zero emissions by 2050, if not earlier. So my question to you, Eddie, is that what is the motivation of the insurance industry in harnessing its capabilities to achieve a net zero world?
Thanks, Butch, for the question. And first of all, hello to everyone. It's a real pleasure here to support this event on aligning portfolios with the Paris Agreement. I hope you're all safe and healthy. Obviously, the reinsurance and the insurance industry has quite a long tradition in dealing with climate-related risks, in particularly when it comes to the frequency and severity of weather-related events, so what we call the physical risk. I think to better support the transition to a low-carbon economy is a more recent phenomenon, but it's just an expression that we as Swiss Re, but also the industry at large, clearly wants to contribute more actively to move the world to a low-carbon economy. I can just highlight that at Swiss Re, sustainability in a broader sense, but also climate change is a key part of how we run our businesses. It's more and more embedded in how we run our assets, how we underwrite our business, but also how we run our operations. I can also say that this topic of sustainability has been a key motivator for me personally. I joined Swiss Re almost 30 years ago, and sustainability and climate change have been with me throughout these 30 years. I even remember one of my first projects in 1999 was to already assess what may be the longer term impacts of climate change on the frequency of storms and floods, and clearly this commitment to sustainability has also been a key reason why I've been a fan of this company, Swiss Re, but also the insurance industry at large. This topic of resilience, I think, is just so close to the principles of sustainability that we need to do more out of that strong basis. So Swiss Re clearly expressed the commitment to the Paris Pledge in 2015. We want to see a world clearly increasing less than 2 degrees. We want to achieve the net zero on both our assets and liability side of our businesses, and by 2030 on our operations. We have a climate strategy in place at Swiss Re. It's in execution. There's a lot around, obviously, the physical climate risk, how we assess the impact and deal with increasing frequency of certain types of events. But also it's a lot around providing solutions, particularly around renewables, so we can help accelerate the world transitioning to a low carbon environment. And obviously we also do a lot around partnerships, as clearly we cannot do these things alone. We need to act as an industry and even with broader stakeholder engagement. I can also say, as not only the Chief Underwriting Officer of Swiss Re, but also as the chairman of our institute, where we coordinate and prioritize all our research activity. Also there, clearly, climate change has a very high priority. Obviously, we have exposures on both the assets and the liability side from climate change and from the transition to a low carbon environments, but clearly as an industry, this also creates opportunities. We can build new businesses that actually support moving in this direction even faster. We also disclose financial risks related to climate change. We have been part of the respective task force. I think is also an important part that we provide more transparency around the risks, but also the opportunities associated with climate change. But if you really ask me what is the why should we engage even stronger on this topic of climate change and limiting the warming below the 2 degrees? And clearly we do not do this just of good corporate citizenship, but clearly we believe that running our businesses in line with sustainability principles and contributing to reducing the move to a low carbon environment is in the long term also better for our risk-adjusted financial performance. It's as simple as that. It's also good for running our business in a high-quality way.
Thank you very much, Eddie, for those insights. I think today there's a lot of fellow C-suite executives from around the world listening to you, but also fellow chief underwriting officers and underwriting practitioners. And, you know, if you go down really to the core of insurance, one can say that at the heart of the business is underwriting. So this process of defining, evaluating, and pricing insurance risks. So when you consider underwriting, Eddie, and then you then stretch that into an agenda where you say we need to underwrite in a way that our portfolios are aligned with net zero targets and the Paris Agreement. That's something really new. And so what would be what does this entail for at the company in industry levels when we're talking about underwriting portfolios and then actually aligning them towards these big global targets?
Yeah, maybe let me start by recapping a little bit what the industry and also Swiss Re has already been doing. And clearly we need to do this together as an industry. It's not good enough for just one or a few players to drive this forward. So many actors in the insurance industry have taken quite a stance on climate change. But so far, this has been mainly what I would call on a transactional level. So one example is around thermal coal. In the case of Swiss Re, since 2018, we do no longer provide insurance on a direct or facultative basis for transactions or companies that have more than 30% of thermal coal. And there's many other companies who follow a same track. Another example is around oil and gas, where also we exclude companies that are the most emission intensive. So we try to measure how dirty the oil and gas production is, and we start to exclude the worst one of those. So clearly there are risks we need to exclude, but we should not only look at the exclusion side, we should also support new technologies, new developments that accelerate the move to a low carbon economy. So providing capacity for renewable energy. We are a leader in providing capacity for offshore wind farms, for example. We also do a lot around solar. So clearly, these are all things that have already been going on. Also at Swiss Re and other companies, we had a sustainability risk framework in place where actually we filter out transactions that are not complying with sustainability goals, infrastructure projects that are really not supportive to go in the right direction. I think what now really needs to happen is to move from this more case-by-case application of sustainability and climate change criteria to a more systematic and also quantitative approach to assess climate change impacts on our business. Only then we can really accelerate the impact. So we now have a first attempt via the Chief Risk Officer Forum, first methodology to carbon footprinting. And I think it just shows the importance that we need to find ways to really measure the climate change impact of our portfolios. Because only if you do that at the portfolio level, you can really make this part of how you run your business. When it comes to setting portfolio targets and also measure the progress, you can really set the right incentives for your business. I think that's now the important next step, to really apply this at a portfolio level for climate change, but longer term also for other sustainability aspects that need to be measured in the different businesses, and then we can set targets and really accelerate the move towards a net zero goal by 2050.
Thank you very much, Eddie. So, I mean, to just summarize, I think we would need to move from transactional to a portfolio-wide perspective. At the same time, I thought your comment on moving from qualitative to quantitative metrics is actually a very important journey to be had. So, Ivo, did you want to ask further questions before I ask another one for Eddie?
Sure. I think it's a good opportunity, Ovais, to bring you into the picture again, and I think you recognize that we've embarked now on this journey of aligning the underwriting portfolio, and we will be learning along the way. There's no doubt. What is from listening to Eddie? How do you think the UNFCCC can actually support the industry on this journey, in particular with respect to the systematic quantitative approach, as Eddie alluded to?
Very much again, Ivo, and really very encouraging to hear from Eddie and his views and commitment that he's been in following the climate change evolution over the past 30 years, and he is at the center of the underwriting business in Swiss Re. So I really very much appreciated that you don't only do it for corporate, but a much broader perspective, including a moral and ethical reasons for doing the right thing in the insurance industry and the underwriting business. In that regard, making sure that we don't leave huge stranded assets around the world, or insuring those that would create problems in the future. And I also very much appreciated that exclusion of the fossil fuel industry or businesses and industry, and inclusion of the new direction towards renewables and solar and wind, those kind of things. So I think it's important. But let me tell you, in response to your question, with our work towards COP26, which unfortunately, as you all know, has been postponed due to COVID, and it'll be held next year in November in Glasgow. And our role as facilitators of the climate negotiation process, we hope that countries will be able to agree on key elements that will also help you, the industry, the insurance industry, in this endeavors, and create the right kind of frameworks and incentives that will make the transformation of the insurance industry and our economies as a whole. We all need to understand that this is a race that if we lose, we all lose together. So therefore, we need to stop walking in the wrong direction and turn around and embrace a low carbon reality. Since 2013, there has been a strand of talks dedicated to loss and damage, and many of you will know the Warsaw International Mechanism, which has outlined the loss and damage financial needs for developing countries. As a build-up to that last year, at the last year's COP, which happened in Madrid, although it was the host was Chile, is referred to as Santiago Network. The negotiations and discussions in that discussion have focused specifically on your industry, in the insurance industry, to provide technical assistance in the developing countries and to achieve economies of scale necessary to make it work. So therefore, what is clear is that there must be serious engagement between governments and the insurance sector in order to provide the necessary enabling environment for this industry to thrive. And we in the UNFCCC organization, we're very eager to work with different industries. As an example, we have recently signed, the two industries that have come together very energetically are sports and fashion industry. And they have signed a charter, and they are requiring all companies and different supply chains within the industries to sign up to the goals and targets of Paris Agreement. And we can share that experience with your industry to create a similar charter for the insurance industry. And we are also working very closely with many countries on needs-based finance projects to help, especially the developing countries, the countries at the outlying forefront of the impacts of climate change, the LDCs, the SIDS, and the countries who are lying low in many parts of the world. And we work very closely with them to figure out what is it that their needs are in terms of finances that would be required to sustain, to help them recover. And we would be happy to facilitate the insurance industry engagement in the development of regional and national climate finance access and mobilization strategies. And we look forward to the details that you in the insurance industries can share with us so that we can then also develop and bring that our discussion in the negotiations and inform the government so that different stakeholders can come together to find those solutions that we all need. Over to you, Ivo.
Thank you. Always. I hand over to you, Butch, immediately for Eddie.
Right. So, conscious of time, perhaps we can do the online poll right now, and then we'll close with a final statement from Eddie and Ovais. So we wanted to get the pulse of the audience right now on one question. And if you can show that online poll, please go to the poll tab on the Swiss Re website. The question is, which is the more important reason to achieve the 1.5 degree target for the Paris Agreement? Is it to manage unavoidable climate change risks? So as Ovais has mentioned, we're already experiencing climate change or above 1 degree warming since pre-industrial level. So this is really adapting to climate change, or is it to avoid unmanageable climate change risks? So this is really avoiding runaway and unabated climate change that will be catastrophic for all of society, in fact. So we're getting some responses right now, and we will keep that open. At the moment, it seems like out of the 50 or so, there's majority are saying the more important reason is to avoid unmanageable climate change risks. So this is the driving reason for many so far in terms of why we need to achieve that 1.5 degree target. So on that note, I'd like to hand over to Eddie, perhaps a closing statement from you. Eddie, having heard what the UNFCCC has to say, and also this online poll, perhaps a statement from you as Chief Underwriting Officer. What is your message to your peers in the industry and to stakeholders there on this agenda?
Well, first, I would just say personally, I've been very encouraged the last couple of years about the increasing momentum in our industry to support sustainability, but also the climate change actions more specifically. I can just tell you the last couple of years, I cannot recall any meetings with insurance company partners and clients, but also with investors, where sustainability and climate change has not been a topic. So the momentum is clearly there, and it's now all about moving from just describing the problem, which has happened a lot in our industry, but also at the government level, to really taking actions, to coming up with master plans, and not just pay lip service, but really turn to action. And the topics of today, I think this is really crucial to bring it to the next level, move away from what we described as this transactional approach to really manage climate change risk more systematically in our portfolios. So to work together as an industry, to exchange, because it will be quite a stretch. We now started with the CRO Forum to develop a footprinting methodology around carbon, but clearly we need to do more, and we need to do it together, because this won't be easy. So I really encourage all of you to team up and work together in this direction on real actions, and not just describing the problem anymore, but move into the execution mode. That's for me the key point. Thank you.
Thank you so much, Eddie. Thank you very much to Swiss Re. And Ovais, parting shot from you. I mean, in the run-up to COP26, we now have an industry that seems very willing to be part of the solution. Any final thoughts from you?
Thank you very much, Eddie. Thank you. And listen, I can say that this engagement today was extremely relevant, as I said, but it gives me a lot of motivation to continue to work towards engaging all stakeholders, and in this case, the insurance industry. You are really, and I say this from my personal experience, coming from a finance background, you have a huge leverage that you can use, exercise, and increase the ambition within the industry and through your industry to the various tributaries that you work with, the insurance agents and different companies, the clients, the customers, so we can all come together in this. In this regard, what I'd like to highlight is, or share a recent initiative, is for all of you in the industry to join the Race to Zero. Now, what is Race to Zero? Race to Zero is a global campaign which is now being led by the high-level climate champions to rally the leadership and support from businesses, cities, regions, investors towards net zero by 2050. It currently, let me give you some statistics, it currently mobilizes a coalition of leading organizations and cities around the world. There are 449 cities, 21 regions, 995 businesses, almost close to 1,000. And 38 of the biggest investors and 505 universities. And these are the real economy actors who have joined the 120 countries in the largest ever alliance committed to achieving net zero carbon emissions by 2050 at the latest. Collectively, this group of people, a group of stakeholders, as I mentioned, they account for 25% of global greenhouse gas emissions and over 50% of global GDP. So it's a huge coalition of the willing, so to speak. So the Race to Zero mobilizes the actors outside of national governments. Now, why that is important? Because national governments are the ones who would eventually come to the COP in negotiating, in finalizing the remaining agreements that need to be sorted out at the formal negotiations. But this coalition of the other stakeholders will put collectively will put a huge pressure or provide a signal to the governments for the governments to then take notice of and take action in a positive way. So we hope, regardless of the political differences that we are experiencing in different parts of the world, so this kind of mobilization, this kind of engagement is what is needed to send those kinds of strong signals. And another very important signal that is coming is from the youth, as we have seen in the recent past. The youth are speaking up. So a similar kind of momentum needs to happen. And I firmly believe that insurance industry can play a major role in this by giving the right signals to the governments and industries through the cost of their insurance policies, adequately accounting for climate risk, as Eddie already mentioned, by showing where climate-proofed insurance gaps are, and incentivizing the kind of large-scale behavioral changes across the sectors, in particular the renewables, the sustainable ways of doing business at a very large scale. So therefore, and the final comment is, I encourage all of you to work towards building resilience for the livelihood of people around the world, while continuing a thorough and honest internal transformation that may seem courageous, but at the same time is the only option we have, and that we all need to commit to, work towards. And we in the UNFCCC Secretariat, and me personally, very much engaged in that direction, and we'll be very, very happy to work with all of you and share whatever experience and provide the platform that you need to towards that transformational change. Thank you very much.
Thank you very much, Ovais. Thank you for articulating that zero is the new number one. And so I think we will try to support you as we move to COP26 next year. Thank you very much to you, and thank you very much again to Eddie. Let's get going straight into our next session. We need to catch up a little bit with time, so I'll try to speed up. And so this next session really goes a little bit more into the emerging industry thinking and practices about aligning insurance portfolios with the Paris Agreement. I'll start with a quick presentation, and then this is the only presentation that you'll get today. The rest is really a discussion. So let's go on to the next slide, please. So I think what the Ovais has already shared with us, that there's already climate change right now. We are already above 1 degree Celsius since pre-industrial levels. And the idea is, how do we limit warming to 1.5 degrees by the end of the century? Next slide, please. And what the latest science is showing us is that, based on the special report of the IPCC on the difference between 1.5 and 2 degrees in terms of warming, it's a world of a difference in terms of impacts, whether it's on extreme heat or sea level rise or ecosystems. There is a big difference in every half degree of warming. And so, to highlight one thing in the slide in front of you, even at the best scenario we're hoping for, at 1.5 degrees, there will be a decline in coral reefs by 70 to 90% at 1.5 degrees. And at 2 degrees, it's virtually gone. So this is the stark reality facing us right now. So when we talk about temperature increases and the global mean temperature increase, I think we need to be really conscious about what we're talking about when we talk about 1.5, 2 degrees or a little over that, because science is showing us that every half degree of warming is a world of a difference. Next slide, please. And obviously, we have articulated in many ways in the discussion this morning the role of the insurance industry in sustainability, including climate change, on the role on understanding risk, the role of insurance, and the role of insurers as well as institutional investors. Let's move on to the next slide. And so what we have heard from Eddie is that chief risk officers from the insurance industry have banded together to start thinking about how can we understand and measure, as we move from qualitative to quantitative, the carbon footprint of insurance portfolios, and eventually give an insight into what is the carbon intensity of insurance portfolios, and whether, if you put a thermometer in insurance portfolios, how aligned or misaligned that portfolio is with the 1.5 degree target. And so there's been some work by the CRO forum here that we will explain a little bit more during the discussion. But this is the whole idea of measuring carbon footprinting that will be a step towards potentially understanding the warming potential of insurance portfolios. Next slide, please. The other interesting agenda is that UNEP, through the PSI, will be releasing next week a progress report on the use of climate scenario analysis in the context of climate-related risks to insurance portfolios. So this is another way of enhancing climate risk assessment and management in the insurance industry, and looking at climate change futures that we may face out there. And obviously, the future that we're trying to achieve is a 1.5 degree maximum temperature increase in this context. Next slide, please. So while these are really cutting edge initiatives, they are all meant to really help the industry enhance its understanding and management of climate change related risks to insurance portfolio. So if we go to the next slide, the agenda today pushes that further. That agenda pushes the ambition further. So with enhanced climate risk analysis, how can we then steer insurance portfolios in a way that we can help bend the emissions curve, so that green line at the bottom of that chart, that 1.5 degree trajectory is something that insurance portfolios ultimately can contribute to. Next slide, please. And so we have seen an initiative already through the UN-convened Net Zero Asset Owner Alliance of how insurers and other investors like pension funds have joined forces together to commit to transitioning their investment portfolios to net zero by 2050 in order to support the 1.5 degree target of the Paris Agreement. So that's happening as we speak right now. My colleagues at Uneps Finance Initiative are leading this together with colleagues at the Principles for Responsible Investment. So in the next slide, the real agenda today is that as an insurance company, there is obviously the insurance portfolio and the investment portfolio. What can we do on the insurance side of the house that can match that ambition that we're seeing of insurers as investors to achieve 1.5 degrees? So without further ado, let's go straight to our panel, and I'd like to call on our colleague from Zurich Insurance Group, Linda Freiner, who's the Global Head of Sustainability at Zurich, and Zurich also led the CRO Forum report, Carbon Footprinting. Linda, did you want to share with us some of the insights from Zurich on this agenda of aligning insurance portfolios?
Absolutely. Thank you very much, Butch, and hi, everyone. I think that we have really got a really good context setting with the previous speakers, so I'll try not to repeat too much of that, but it's clear that climate change has been an important topic for Zurich for at least the past 15 years. And the way that we've looked at it has really evolved. And in June 2019, we then decided to sign up to the UN Global Compact Business Ambition for a 1.5 degree pledge. And that is really kind of a Paris Agreement for the private sector. We also heard about Race to Zero, and I think these are all very closely linked to each other. But for us, this was really, the most ambitious commitment that we could set, and really to give us a North Star and go beyond the adaptation measures, or like Eddie mentioned, what not to invest in or what not to underwrite. So we know that it's very bold, but we've also said that if we don't commit to a net zero by 2050, and we don't start now, then we're never going to get there. So this is really a long-term commitment for us, where the curve of investing and ensuring carbon-intense activities crosses in a declining manner that of an increasing amount of products and solution and impact investments that can help reduce emissions. So it's very important to look at it from a long-term perspective. So how have we started to work on this at Zurich? Well, of course, it is also a long process. I mean, first of all, you have to make sure that your organization understands what is this 1.5 future, or what is net zero. We tend to throw around in the sustainability sector a lot of nice concepts, but to our underwriters, our investment managers, and claims, it's not that simple. So the first thing that we actually did to try to really deeply understand and integrate climate risk in the organization was really to create a climate risk academy, where we run our people through actually now an online platform training with different types of topics to really make sure that they truly understand the science behind this and why we're doing that. Because of course, a lot of sustainability in the past couple of years has been associated with not underwriting coal or not underwriting tar sands, because that's a lot what's been in the news. But we actually need to be able to do a physical and transition risk analysis of all our lines of business, and also in the accumulation impacts. So there's a lot of knowledge that needs to be built up in the organization. Then the second piece is what Butch mentioned, the CRO Forum report that we led, and that is, it's not by any means a climate risk assessment. It's really a one-off project trying to really develop an industry methodology options for how we can measure the carbon footprint of a portfolio. And it really gives an indicator of a portfolio's exposure to carbon emissions at a given point in time. And what we can use this methodology for is really to inform and to develop our own climate strategy. And that's what we have done at Zurich. So we have really used that methodology to try to get a snapshot of what do we actually have in our portfolios. But the next step, and I think that's what Butch's nice image around the evolution of the insurance industry in this sense, is to try to create and set science-based targets. And I think that's, you mentioned also the Net Zero Asset Owner Alliance, and they of course build the methodology on the science-based targets initiative work that has now been going on for the past few years for the investment sector. And that is something that we have to look at from an insurance perspective as well. And I hope that we can get back to that discussion in the Q&A section. And also the fact that this is not something that us or Swiss Re can do on our own. It really needs to be something that we buy into as an industry. Now, we can set all sorts of targets and put out big commitments and joining, but the reality is that if we are not catalyzing our customers' transitions, we are never going to get there either, because we invest in the real economy, and therefore we have to engage with our customers, and that needs to be at the front and center of our approach. We have to then going back to equipping our organization to have that conversation. Okay, so what are the transition plans of our customers? What are the timelines, and how can we support them in that work? And that really leads me to the final point, and this is that there is an enormous opportunity for innovation in this space. So let's not only talk about the risks, the climate risks per se, the exposure, and how we need to, what actions we need to take. We also need to look at it from an innovation perspective. Because as more we know our customers' behaviors and needs, then we can start looking at, okay, so what are the products that we need to develop for them? Is this an exercise of a pull, or is it a push product development approach? How do we also change the mindsets within our organization that this is not rocket science, that these new products and services that we provide as an industry, it can oftentimes be add-ons to existing products to really try to incentivize climate risk mitigation. And we can also use it in our claims process or when it comes to insetting. I know that's something that Swiss Re is looking at. So I think from our perspective is that we really have more influencing capabilities that we think as an industry. We have been ringing the alarm bells for quite some time, and I think the gentleman for Uneps said that a 2-degree world is not going to be insurable. We're getting down to, we started at 4 degree and now we're getting down to 2 degree. And so we have to, of course, make some really tough choices as an industry of what is our role here. We're going to need the right set of data to get there. We're going to have to skill our organization. And then last but not least, we're going to have to engage with our customer on this topic. We cannot just run on our own. This is really an inclusive process that we need to do with the companies we invest and we insure in. Thank you, Butch.
Thank you, Linda. Just a quick follow-up question and just a very quick reply. I think what we are seeing from companies like Zurich is that there's really been a journey on this agenda, the wider sustainability agenda, but also that net zero agenda. And I think if you talk to your peers out there, what you've learned in terms, and you said we need to be bold, and the way that this takes courage. What is the key insight that you want to share with your peers in the insurance industry who have not yet started that agenda on net zero?
I think the key thing is that, going back to that 2-degree insurable world, I mean, we're not going to have any customers left if we are not helping them to transition. So I think that's what we need to see our role as a driver of change, instead of just ensuring the change that is probably going to happen, and be a follower. And that this is a systemic approach that we need to take. And yes, it's a bold commitment to make for a company, and we have no idea how to get there today, but we're going to just have to do it, because if we're not going to do it, then we're not going to be around in the next 20, 30 years as an industry. So it's the only future.
Thank you, Linda, for saying in many ways that we need to begin with the end in mind. So let's check the pulse of the audience, and let's go with the online poll question 1. And just to see what is so the question that we have is, has your company measured the carbon footprint and or intensity of its insurance portfolio and or its investment portfolio? So we just want to understand where, obviously this applies to insurers and reinsurers, to understand where we are, where companies are on this journey. And obviously there is also a no option or an I don't know option yet. So it seems like if there's anything that action has been taken is on investment at the moment. A significant portion of folks don't know, and there's hardly any on the insurance portfolio side. Okay, let's keep that going, and let's move on to our second speaker. So we have Renaud from the AXA Group. He's the Chief Risk Officer. And Renaud, I wanted to ask you, I mean, you've heard from Zurich, the journey of Zurich Insurance on this agenda. Can you also share with us what AXA has undertaken on this agenda and where you are?
Sure, Butch, very happy to, and very happy to be with you all. I hope you're doing well. Thanks for having us at AXA, because indeed what we are discussing today is at the core of the AXA DNA, at the heart of how we think and what we do. So very happy to share with you a bit of background. Butch, you will remember that very fondly, because back in 2006, AXA actually chaired the seminal UN working group that you had created, and that worked to culminate into the 2012 signing of the PSI in the Rio summit. Then in 2015, AXA pioneered the move of the industry to divest from coal with a gradual phasing out. And actually, all of the work that we have been doing over the past few years is to learn from that pioneer initiative on the investment side, and to roll it over to the insurance technical side. So to be very concrete, starting in 2017, we exited the underwriting of property or construction insurance for coal mines and coal plants. In 2018, when we made a very transformational strategic move for the AXA Group by acquiring AXA XL in the US, we actually applied these principles to AXA XL. That was definitely no small feat and no walk in the park. You know, we had lengthy negotiations with clients, with brokers, but we pushed forward because we believe once again that it's a strategic agenda that's core to us. It's not, you know, some window dressing. We really want to live by it very concretely. And in 2019, we actually extended that policy to other lines of business, for instance, motor fleet. So, you know, if you run a coal plant, we wouldn't insure your motor fleet. And we also expanded the remit of the exclusions, for instance, to shale industries. And, you know, we want through these steps to make sure that we walk the talk, and beyond the grand scheme of things and the principles on which we agree, we take, you know, very mundane, practical, pedestrian steps to implement this forcefully throughout our portfolio. Just wanted to share that by way of background and to set the stage on where AXA is standing. And I look forward to exchanging with all of you today into what we have learned through this process and what are the next steps and the next challenges.
Thank you, Renaud, for that insight. Can I just ask you a quick question? So, I mean, there's one. So the whole idea is, how do we help transition the entire economy towards net zero, and insurance can play a role there. And so you mentioned one of the ways is through the exclusion on the dirtiest forms of energy. And then there is also the agenda of, you know, channeling developing insurance product solutions for the cleanest technologies. But in between that spectrum, there is an economic-wide transition across sectors that has to happen. Is this? Would you like to articulate better on perhaps how AXA can support this transition across sectors, where we not only go and dispense with the dirtiest and only go for the cleanest, but also really go at the whole slice of the pie?
Yeah, thank you, Butch. And indeed, just like the ESG approach over the years or over the decades has morphed from something which was very much exclusions-based to something which is much more affirmative and, enhancing the new opportunities, we have been doing so as insurers. So on the investment side, last year, in November 2019, we announced a series of very demanding commitments, one of which is actually to fund transition bonds, specifically to help people move from dirty to clean, to put it bluntly. And we do believe indeed that it's very important to steer our whole economy and even our whole society towards that goal. And on the insurance side, we have also developed innovative underwriting capabilities to make sure that we can support either startups or well-established clients towards this move through parametric insurance, through innovative P&C commercial lines insurance on new products and new end industries. So we are definitely very, very active on that front.
Thank you very much, Renaud. That's very helpful. Let's check the pulse again of the audience for our online poll, our second question, and see where folks are, insurance and reinsurance companies, in terms of climate risk assessment. So the question we have here is, has your company carried out forward-looking climate change scenario analysis for its insurance underwriting portfolio in order to better manage climate-related physical and or transition risks? So physical would be obviously the physical impacts of climate change because of flood, for example, or cyclones. And transition risks are those that pertain to the transition to a low carbon economy due to changes in public policy or changes in regulation and market dynamics as well. So in the first question, we were looking at footprinting, measuring footprint, and this is another one of those tools that insurers can look into to better understand and better manage climate change, for the reason that the past is not a reliable indicator of the future. So this agenda of scenario analysis is also getting traction, particularly through the recommendations of the Task Force on Climate-Related Financial Disclosures. So there you are. We're getting, there's a big chunk of folks who do not know, and that's already an important insight that we're getting. And there's also a significant portion saying yes for both transition and physical risks. And we'll keep that open for folks to vote. This is not something that will only inform this event, but also something that will inform our work going forward. So at this point, I'd like to move on to our third speaker, Martin Weyman of Swiss Re. Martin, you've heard from Zurich and AXA, their insights on this agenda of aligning with the Paris Agreement. What are your thoughts at Swiss Re on this, building on what Eddie has already articulated?
Thank you very much, Butch. So we share, all three of us here on the panel, I think the insight and relevance of climate change that it has for the industry. Not that it's not manageable for us. I think that's, as we also disclose in our TCFD frameworks, it's quite well manageable still, but the interest is exactly to what Linda and Renaud said. We need to prepare for the future and for the long term, and we need to look at that on a long-term basis, even though we renew, as an example, property policies on a yearly basis and can adjust there quite easily. I think to go back a moment and put that once more in context, as Eddie said, this has been a topic for many, many years, even decades for Swiss Re. And we have taken several measures, the most recent ones really moving on the asset management, the whole investments under ESG benchmarks, having introduced a thermal coal policy in 2018, where we limit support to direct and facultative business to 30% coal, and then on the oil and gas side, where we have put a limit, or will put the limit, to the most carbon intense production from next year to 5%, and then 2023, 10%. So these are some of the measures on the downside side, but let's reflect quickly on also the current situation that we have with COVID, where prices, for example, on oil and gas plummeted enormously, but still we have not a strong carbon price in place, which would help definitely accelerate also the transition. Instead, we have still quite a lot of subsidies for fossil fuel-based industries in place. Another aspect, I think what is important is also that we recognize that some economies are still quite dependent on some fossil fuels, and it is important to think through collectively, not only within the insurance industry, but across different industries, how can we collaborate to basically help accelerate the change to a low carbon economy. And there, I think it is not only important that we start reducing our own footprint, our carbon footprint, and we will talk about that in a minute together, but also that we are thinking through what are those assets which need decommissioning, and how the insurance industry can support decommissioning them, perhaps also quicker than perhaps foreseen from an investment horizon. Swiss Re's journey, besides those measures that I just talked upon, is also that we share this passion that Linda and Renaud just mentioned, of not only looking at the downside and exclusion, but it's very much for us also the overall steering in the direction of reducing the overall carbon footprint. So what we have done on the asset management side, and I think that's an interesting point to perhaps replicate, also the enhancement and engagement with companies on the underwriting side, to really think through how can we work with our customers in both insurance, but also in corporate and then personal lines, to really work through what are the risks. And that's something which we need to invest a lot, I think, to be fast learners of what is the risk landscape looking like for a low carbon or net zero economy, and then help step by step to transition our customers with that. I think it's useful that in the last couple of years, not only Swiss Re and AXA and Zurich, but quite a number of companies have taken serious steps. And I think the new thing is that it's not only on the downside reducing exposure to the most carbon intense industries, but to also invest quite a bit in what are new technologies or established technologies that can be used to lower carbon. So I think the overall message here is this is a mission possible, but it's really hard to overcome some of those challenges. So if you think of a consumer company, then it's really about attaching the carbon intensity to every product that a consumer company sells. And here in the insurance world, it's the same. So we are on the investment side, it's quite straightforward. You have an equity or you have a corporate bond that you can attach a certain carbon intensity to it. On the underwriting side, it's quite a bit more complicated because you have an engineering cover as an example, you have a property cover, where you need to think through carefully what portion of, or basically how you attach the carbon intensity there. And that's exactly where the CRO Forum working group and the paper on carbon footprinting is a very good start. And I think now it's about time also as we start to implement that, not only at Swiss Re, but several companies do that, but that we work also with further stakeholders to make those approaches on the one hand transparent and on the other hand really have a bit almost a competition for the best approaches together with stakeholders, but in a very collaborative approach. So these are some of the thoughts. Let me just finalize by saying the products that we have at the moment in insurance, often they can be just applied to new topics. But when we do that, it is important that we put a price at the risk so that the risk is is basically reflecting really the risk. And I think at the moment, this risk transparency or the information function that insurance has as well, in particular reinsurance, is important here, besides giving risk capacity. And let me leave us with a thought that I think the capacity given by insurance is more scarce than investment. And I think, therefore, I think insurance plays an enormous important role in this play to really get to net zero by 2050 or earlier. And important is here collaboration not only within the insurance industry and with partners that we have here, be it from NGOs or the UN or also the supervisory community, but also thinking through how do we collaborate across different industry sectors, because this challenge to reach 1.5 degree or well below 2 degree is much bigger than just our sector. But there we can play a role much beyond our own sector.
Thank you very much, Martin. I just wanted to follow up. So you mentioned a little bit there on what is happening a little bit on the investment management side of the house, and you mentioned equities and corporate bonds. And obviously there are also some more challenging asset classes like sovereign bonds, for example. Can you give us a little bit more insight on insurance lines and the sort of nuanced thinking that one should be mindful of, particularly with the CRO Forum report, because there's a lot of insurance lines. There's life and non-life, life and health, and there's commercial and personal lines. Would you like to shed a little bit more insight there on what the CRO Forum has found out, and also what Swiss Re is, how Swiss Re is looking at lines of insurance business and looking at carbon intensities?
Yeah, thank you, Butch. So I think on the commercial insurance side, it's quite straightforward that you have, as I said, basically you can look at the products or the portfolio of products that the company has and really apply per transaction a carbon intensity. So on the transport, as an example, that's on the commercial transport, be it on land, on water, this is something where you quite easily can attach a carbon intensity to that, or to construction when we think about engineering covers. So I would say on the commercial insurance side, what we have looked at with the CRO Forum, the energy production and all the energy parts, so really from coal to oil and gas to renewables and other forms of energy, that's something, an area where many insurance products can be easily attached. Same on the agriculture industry, on the transportation industry and the manufacturing industry. I think these are some of the focal areas that we would start when we talk about the commercial insurance industry. On the personal line side, it's a bit more difficult, I would say, overall to have an approach which is as or that you have data availability at the same level and granularity that you need. So you basically need, on the individual basis, when you think what car you own and how far you're driving, you need much more granular data. Therefore, personal lines, I would say, is a bigger challenge to achieve. But nevertheless, I think on automotive and on property, these are good areas to start with.
Right. Any message for life and health insurers, Martin, on this topic?
Yeah, so on the life and health side, I mean, there it's also when you think of group life or individual life, you can think basically of the individual needs that life coverage or would have. But to attach a carbon footprint to a normal individual might be more challenging than it is to. It's basically just you would need to judge the lifestyle, and I think this is truly an emerging discussion. I think it's not something that we have discussed to depth and detail, but that's definitely something emerging. But if you think of a life policy, let's say for a mining or oil and gas company, then yes, you can attach certain carbon intensities there again.
Thank you very much, Martin. And so let's get interactive again and check the pulse with our third online poll question for this session. And the question is, which is more challenging for an insurance company to achieve? To transition its insurance portfolio to net zero greenhouse gas emissions by 2050, or to transition its investment portfolio to net zero greenhouse gas emissions by 2050? And there is also an I don't know answer there. So let's see what people are saying. And the numbers are picking up. And it seems like we are really starting this journey, Martin, of understanding what net zero means for insurance. And a lot of people will probably need some guidance and support on this journey. As you all on the panel have already shared with us right now, we're on the cusp of starting this journey, but it is really quite cutting edge. So while we keep that open, so please continue to vote. We have a few minutes left, but I want to answer a few questions also that we got online. This is also a very practical question. There's one question that says, I appreciate exit of underwriting for fossil fuel clients by European insurers, but these clients will find other insurers. How do we then create a level playing field? Perhaps, Renaud, would you like to take that question? And I also have a question for Linda later on.
Very happy to, Butch, and thank you very much for raising that question, which is super topical. I think it's really ultimately a matter of alignment. Alignment between stakeholders, which is exactly what we are doing today. And I would like to thank the Unep for hosting us under the sponsorship of Swiss Re, together with our peers at Zurich. And we are very happy to have NGOs and regulators on board as well, because this is a fight that will drive all together. And it's great that we are united. Also, alignment in terms of levers. And to echo the poll that was just conducted, what we have managed to do, or we have actually managed to start doing on the investment side, we now need to replicate it on the insurance side to make sure that we use all the leverage, and Ovais was mentioning earlier the leverage that we have, both on the asset side and liability side as investors and insurers, and indeed we should play on both fronts. But then the third alignment that we need, beyond the alignment between stakeholders and the alignment on the levers we use, is an alignment between the jurisdictions. And I think that we are very happy together with our colleagues at Swiss Re, at Zurich, to lead by example, to show the way. But indeed, we need a level playing field beyond a few European pioneers, and we need to make sure that there's a consistent framework worldwide. Otherwise, if we lead but there's no traction, it will be diluted. So I'm totally with you, and this is why the United Nations framework will be as important as ever. We need to coalesce and to make sure that what used to be something which is something maybe of a maverick, pioneering, becomes a global standard.
Thank you very much. That's quite clear, Renaud. And Linda, I have a question for you, building on what Martin articulated earlier of how insurers can engage with its clients and customers on this agenda. So a lot of insurance business really is also, aside from direct transactions between a client and an insurance company, is done through brokers and intermediaries. And so Renaud had mentioned alignment as a key agenda for all. What are your views about alignment across the insurance industry value chain in terms of this agenda of making sure that we are all on the same page and want to achieve net zero?
I think it's, we have to have an ongoing discussion with our brokers, and they understand where we're coming from, why we're doing that. This is not just to penalize one industry, but it's really about the risk that we're taking on. And I think also going back to the reality is that, some of these large projects, if the European insurers are not there, it's actually very, very hard for these projects to go through. And I think Martin also alluded to that yes, it's just maybe European insurers taking a stance, but actually when you put together the big European insurance company, you take out a pretty big chunk of the market already. So we are actually sending a signal that, of course, will also impact pricing in a way, and also the expertise that we carry as big insurance companies. So we shouldn't underestimate that. But I think what the brokers are starting to see now, they are positioning themselves much more on the opportunity side to say, okay, so what are the climate risk services that we can provide? How can we develop that? And not maybe touching so much on the risk side. And I think that's it's also hard for us as insurance companies. And I think when we looked at the poll and what's harder and what's not, on the investment side, we have a choice. We have company A or company B to invest in, and we have the ESG rating, and we can choose which one we choose. But when you have a customer in front of you and you make your climate risk assessment to them, and you have the conversation around the transition plans, what is the decision that you're going to make, and do you dare to say, no, this is not enough for us? So I think we are facing the same challenges as the brokers are facing, who are actually, linking us up with the customers on specific projects.
Thank you very much, Linda. And Martin, one question for you. It's a very basic one. So I like basic questions because these are really fundamental things that people ask when you talk about this agenda. So a simple one. If we underwrite the clean business, isn't it a logical consequence that those who underwrite the unclean business will win, since this will be more costly? Did you want to respond to that, Martin?
Yeah, so I think in the short term, you can probably do some business because capacity gets scarce, and so the unclean business in that sense has a higher price. But in the long term, I think, as I mentioned before, it's important to have risk adequate pricing, and so the overall also new technologies will need to have a price which is adequate to the risk exposure. So I think this question aims more to a short-term view, and yes, you can always win as long as the party is going on, but also in the long term there are already quite a lot. If you take the example of coal, there are quite a lot of already companies who have difficulties to sell their coal assets. So at some point there will be less investment in those assets, and therefore it's also important to think through how to decommission that in a safe mode. And as I mentioned initially, the insurance industry probably needs to play a role. But I think let me turn, I think there, as Linda mentioned, there are so many opportunities on all the technologies needed and also nature-based solutions on the transition, that in the long term, this competitive advantage will be much bigger, because that's the future risk pools that we're looking at. And I think with all the efforts done, I think also important is that we need to think, to reach net zero, also about carbon removal. So I think we need to do our best, and in our own operations, we set an accelerated target for 2030, as I mentioned, and have just taken very serious measures beyond just what we had done in 2003, being carbon neutral, now really being at net zero in 2030, and really introducing a very significant internal carbon price. So overall, when we look at both investment and the underwriting side, I think there are plenty of opportunities, while in the short term, yes, there might be some winners who continue to insure or invest into the less clean industries, but in the long term, I think these are just not the future risk pools, and therefore not the right strategy to do.
Thank you, Martin. And so we're virtually out of time, but I just want to give everyone on the panel one last insight on the next thing we should be doing to take this agenda forward, like really practical. What's the next thing we should be doing? Let's start with Linda, Renaud, and then end with Martin.
The next thing we have to do is to develop a science-based target methodology to be able to really measure the footprint and to set out the scenario that we need to be on to get to net zero.
Thank you, Linda. Renaud?
I would definitely echo that, because I think, we've been doing work on carbon footprint for the insurance side. We've been doing work on warming potential on the investment side. And we need, no pun intended, to melt that all together to make sure that we can have a temperature matrix on the insurance side, which is, once again, quite a gigantic task, especially, if you look throughout the portfolio of clients in various end industries across all sizes. I'm thinking especially of our SME clients here. It's going to be a big task for the month and years to come.
Martin?
Yeah, so I couldn't agree more with both Linda and Renaud here. So I think where we stand at the moment, it's really an emerging theme, and there are really encouraging areas that the insurance industry and some of our companies have worked in. But what we need now is basically almost an insurance industry supported by the external initiative, which helps to develop such a methodology which is science-based and which has a very clear and good and transparent view on carbon footprinting. And last but not least, I think we should be humble. It's be arches at the start, but at the same time, this is again a mission possible, worth taking, and I'm very much looking forward to the next panel in this regard.
Thank you so much, Linda, Renaud, and Martin, for your insights. Now that we've heard the market, let's go to the final session and hear what stakeholders have to say about what they've heard from market participants. And to moderate this session, I'm going to be handing over to Stephanie. Stephanie, floor is yours.
Thank you so much, Butch. So for the next 30 minutes or so, we're going to ask a variety of stakeholders of the insurance industry a few questions, and for that we have a fantastic panel assembled. And I'll start by introducing Jeff Summerhays. He's an executive board member of APRA, that is the Australian Prudential Regulation Authority, and he's also the chair of Uneps Sustainable Insurance Forum and an executive member and sustainability champion at the International Association of Insurance Supervisors. So, Jeff, may I ask you to say a few introductory words, and then we'll go on to our next panelist.
Thanks, Stephanie, and good afternoon, good evening, all. It's certainly good evening here in Australia. It's great to be with you, and it's been very interesting to listen to the firm's perspectives and others so far in this evening's event. I want to give you a regulatory perspective, and I will do that through the eyes of the international standard setting body, the IAIS, and also the Sustainable Insurance Forum, which I chair, and that's a network of 30 supervisors and regulators globally in the insurance sector who is collaborating on climate change and sustainability issues. So there's a few relevant things, and there has a lot happened that in the regulatory community in recent years. The IAIS and the CIF were the first global standard setting body to put out an issues paper on climate risk and its implications for the insurance sector and the response that supervisors should think in that context. That was in 2018. In 2019, we released a paper on the maturity of the insurance sector in their adoption of TCFD, and that was informed by a global survey of 1,300 firms, insurance firms globally, and that found that while the larger, more sophisticated firms, many of whom have commented on this call this evening, are quite advanced on TCFD maturity and adoption, the vast majority of insurance firms by number were not, and that is of concern to prudential regulators and supervisors globally. So that has led to those two information papers coming together with a project that the standard setting body and the CIF are collaborating on at the moment, which is an applications paper which looks at the insurance core principles and how they can be mapped back to climate risk to not only inform supervisors and how they should supervise firms, but actually make it very clear to insurance firms about what the expectation of the global standard setting body is on those firms. Now, relevant for the discussion and this session is that there are a couple of ICPs I just want to call out. The first is ICP 7 on corporate governance, and that is going to be mapped, the corporate governance standard mapped back to firms' responsibility at board and senior executive level around climate change capability. ICP 8, which is on risk management and internal controls and ensuring that that is embedded into firms' risk management frameworks. Enterprise risk management for solvency purposes, ensuring that both underwriting and investment practices are aligned to relevant climate risks, both physical and transition. And then on the point of investments, absolutely making sure that investments for the firm also takes into consideration the impact of climate change over time. And finally, and importantly, disclosures and the impact of those on the firms. That applications paper, there is a draft of. It will be released for public consultation in about 2 months' time, actually, maybe October, November, date yet to be finalised. But we have had very strong interest from the various sessions we have run and webinars that we have run. And I'll just give you some feedback from over 300 market participants that we had on a call, where 75% of those stakeholders supported mandatory disclosure of climate-related risks. 80% of the people on the call felt that it should be included in the ORSA, and 90% felt that it should be embedded into supervisory practices. So we've heard a lot of encouraging things tonight on this call, and I guess I wanted to bring the regulatory perspective, which is, I think, working in parallel, certainly with where the major firms are, but as our survey found in 2019, there is a long tail of insurance firms who are not as engaged on the implications of climate risk to their firms as the regulators think they should be. I'll pause there. Thank you, Stephanie.
Thank you so much, Jeff, for that. I think the next view we'd like to take, so we've sort of had a regulatory view from Jeff. I'd like to move on to Nate Aiden. And Nate is a senior associate at the World Resources Institute and a representative of the Science Based Targets Initiative. So we now have a think tank research view on this, the stakeholders' view on the industry standard. Nate, could you also give us a few introductory words on your thoughts and where things stand?
Sure. Thank you, Stephanie, and thanks to Swiss Re for hosting today's event. We have heard a lot from great speakers on the unique role of the insurance sector in mitigation and adaptation and achieving climate stabilization here. And this has been reflected in our experience in the Science Based Targets Initiative. The initiative was started back in 2015, and it's a collaboration between WRI, the UN Global Compact, CDP, and WWF. We launched a call to action back in 2015 as part of our building of a critical mass of companies and financial institutions that are taking action. And actually, AXA group on the call today was one of our first to commit back in June of 2015, followed by MetLife and Zurich and Swiss Re. So all of the companies on today's event have publicly committed. At this point, we have about 970 companies and financial institutions that have publicly committed to setting science-based targets, of which about 470 have approved targets. None of the financial institutions have approved targets yet because we've been preparing some specific methods and criteria for financial institutions to be able to create and assess their targets. Financial institutions and insurance companies are different from real economy companies in that they don't have the large direct emissions from industrial production or energy use in their facilities. It's more of an enabling and indirect role. And so what we're doing is looking at scope 3 targets for financial institutions. And for the past 2 years, we've been developing a framework for financial institutions to set investment and lending portfolio targets. The first component of the framework is a set of methods for target setting. The second is a set of criteria specific to financial institutions. The third is a new open source Python tool that we're developing to guide engagement. And then finally, the fourth is a guidance document, which will bring these all together and provide sort of a how-to. All of these will be released in about a month's time during New York Climate Week with an online event there. And after that, we are looking forward to working with the insurance sector to further elaborate around the underwriting challenges in particular. The polls that have been run so far have shown clearly that there's some confidence and work around investment portfolios, but there's a lot more work to be done around insurance portfolios. That's certainly our experience as well. And so we're taking an iterative approach here, where we're beginning with investment and lending portfolios, and then gradually moving into insurance and underwriting. At this point, the only aspect that we really cover is for fossil exclusion, where there's a coal exclusion provision in the criteria that would also apply to underwriting. And there's a recommendation around disclosure here, but it's not a requirement. So that's just a little bit of background, and I'm happy to elaborate as we go.
Good, thank you very much, Nate. The last panelist for this session too barely needs any introduction, so I'm happy to welcome Butch to this session. And for those of you who might not know, he is the program leader for Uneps Principles for Sustainable Insurance Initiative. And so some words from you, Butch, on your thoughts.
Yes, so I think the topic today and the discussions we've had have brought us closer to really the core of the insurance business, which is really the underwriting side of the house. So in very simple words, all insurers are investors, but not all investors are insurers. And managing risk is the fabric of the insurance business. And this is why I think it has taken some time to get to this point, because we are really going to the core of the business. And that's why I think, based on also the online pulse survey, we are seeing why it's challenging. Unlike, in a way, institutional investment, which is also challenging, but in a very one way, it's also arm's length investing. As Zurich had mentioned, when you talk about insurance business and talk about clients and customers, you're dealing, it's either you underwrite or not. and how do you make that help them support the nutrition? So I think there is a whole challenge here that has surfaced throughout the discussion today. And whatever initiative the UN has seen in financial markets, whether it's investors, banking, or insurance, what we're seeing, it has always pretty much started with a few important traits. One is that there is leadership from market participants. Number two, there's commensurate leadership from financial supervisors and regulators. And I think what Jeff is doing at the Stable Insurance Forum and the IIS, and also in his home turf, Australia, is an example of that. And also the active engagement of civil society like World Resources Institute in this case. But, you know, we've been working with WWF and Mission 2020 and other relevant initiatives. So I think this really pretty much shows that a coalition that is led by very strong signal from the market, but supported by key stakeholders, has really been a strong impetus to have driven change, whether it's really starting from super high-level principles like the PSI in 2012, all the way to the topic we have today of aligning insurance portfolios to the Paris Agreement. I think these are some of the things that we are seeing right now. And I would say, I guess with confidence, that it seems like we have the hallmarks of another cutting-edge initiative that will really aim to move the sustainability needle further and farther.
Thank you for that, Butch. So I guess the question for all three of you is, and there's been some answers floating around already, but maybe we can get some clarity. There's been a lot of discussion about working together, and that we're all in this together, certainly, on trying to help manage these risks and transition the economy. And how do you think, in a very pragmatic way, we should develop an industry standard? Should it be the industry itself, or and how do you propose we go about? Who should lead such an initiative? So Butch had a few ideas there, and Nate, and the views from where you sit, all three of you, is how do you think we can best reach a consensus and a worldwide standard that really can be used by everybody? And maybe I can start by asking Nate for his view on this. How would you go about leading such an effort to come up with a common standard?
Yeah, thank you, Stephanie. It's a great question, and I think that the stakeholder engagement process is essential for creating any standard that's going to be credible, but still practical to apply. And so I think that certainly participation by the insurance companies, including the companies at today's event, but also a much broader global group, is essential. But it's also important to include other stakeholders to cross sectors, as Martin was referring to earlier, and not have just a very narrow stovepipe view here. So I think there's the stakeholder engagement aspect of this, but there's also a number of research questions that that need to be addressed. And I think that this group has begun to address those with the CRO report. It's very great first step. I think that frankly, economic intensity targets are a good first step in doing hotspot analysis, but we find that there are other types of target formulations that can be more robust in terms of the linkage with climate outcomes and the climate scenarios that we heard about from the UNFCCC at the beginning of this event. And so I think some additional research and look around the evidence and the available data there is also necessary to make sure that we're going in the right direction and that these can be clearly linked, and that the talk does actually link with, correspond with climate outcomes that we're all aiming for here. Just one other thing I would say is that, there's unique roles for the insurance sector that go well beyond other financial institutions. And so I think exploring the sources of leverage in the insurance sector is important. In terms of, for example, some kind of good driver discount for climate for companies. And I think this would be linked with the research agenda that I just mentioned. So, there are a few questions in terms of impacts, but also whether companies that have SBTs or are addressing climate effectively are lower risk from an insurance perspective. And this could be a new, for example, product area that insurance companies could explore. So there are a few different aspects, and I think having a multi-level stakeholder engagement process to engage these will be most effective in actually catalyzing action. The final thing I'll say here is a standard takes a long time to develop, but it's clear that we need action before a standard is complete, and we sort of need to work on the way to getting there. And so I hope that a standard can be our endpoint, but that we can also have midpoints on the road to developing such a standard.
Great, thank you for that, Nate. So the complexity of the challenge we've heard a lot about, and there are a lot of stakeholders that do need to engage and work together. Jeff, could you give us perhaps a view also, what is the role of the regulators in this and the trade associations? How can they support this effort without, pushing the industry too fast, too soon, perhaps? How can we make it a nice balance between moving things along, but also aiming towards a global standard that really will take a bit of time? Do you have a sense on how this can take place over the next few months and years?
Well, we need to be considered, but we also don't have a lot of time. So there is a degree of urgency, I think, in the work. And it is true that the informed, the climate scientists have been working on these issues for decades, but the mainstreaming of this challenge is a relatively recent phenomenon, really since Paris, and the regulators fit into that category as well. So if you go back 4 or 5 years ago, climate change, financial risk was not on the agenda. It has been difficult in recent years to go to any regulatory event where climate change hasn't been one of the key topics on the agenda. And I think actions that I outlined earlier highlights that. TCFD has been very successful in particularly with large firms, in improving firm-level disclosure and understanding. But it had 2 other objectives, and that was market-level disclosure and decarbonisation. And the market level of disclosure, which is the topic of this conversation, Stephanie, still has a way to go. We are encouraged by the work that our peers in the NGFS are doing on scenario analysis, which will lead to sort of a common stress testing capability. So at least we agree with a net zero 2050 scenario and a couple of different pathways which will emerge from NGFS, which will then inform not only the banking community but the insurance community and the investment community. We still have the challenge around taxonomy, appropriate measurement tools, modelling, which are still need further development. But events such as this, collaboration between regulators, market participants, academia, think tanks, modelers, that's where this needs to be, because it is moving very quickly, and everybody is learning and coming up to speed. But unfortunately, we don't have a lot of time. So I think there is a degree of urgency. And what has been, just a final point on COVID has shown, as tragic as that is, but it has shown that if humanity unites around a single purpose and health issue, that you can achieve years of change in a matter of weeks. And so it is possible to get the shifts. There just needs to be that common purpose across a whole range of stakeholders to affect the change that is required.
Thank you, Jeff. Butch, so with this sense of urgency in mind and all the various stakeholders and unanswered questions that still need to be researched, who do you think should really help with being in the driver's seat and coordinating all these various stakeholders? How do you think we can come up to a good answer?
Yes, I think the obvious answer would be there has to be market leadership on this agenda of creating potentially a net zero insurance framework. But we have seen it time and again, as I mentioned earlier, that initiatives, whether it's the Net Zero Asset Owner Alliance or even, high-level principles that we started many years ago, started with that leadership, but with global in nature to make sure that it's not a northern agenda. It also covers the south and east and west. That's also multi-stakeholder. That's the reason why, if you look at the high-level principles for stable insurance, one of the principles there state that we will work together with governments, regulators, and other key stakeholders in driving, in promoting widespread action on sustainability issues. And so from the UN and PSI perspective, one can view this platform and similar initiatives as guide dogs towards good practice. And you have Jeff there as a watchdog, as a regulator and supervisor that can also be part of enabling good practices on this along with civil society. But in addition to all of that, I think the really important thing that I personally am sensing that is really important to drive and move the needle faster, given that there's urgency, is that there has to be greater engagement with real economy players. And we are starting to see more activities of insurance companies. I mean, we had an event with AXA last year where we had energy companies talking about the transition. And so this idea of harnessing, taking from an investment narrative of shareholder engagement to ensure engagement and being a partner in the transition is, I think, absolutely critical if we are to reach that target, because ultimately there has to be a serious intention by real economy players to decarbonize their business models and go and take forward net zero pathways. And I think in that context, the insurance industry as an investor and insurer can be a real partner and amplifier of the agenda.
Great, thank you for that. It brings me back to the thought that if it's a long-term view insurers are going to take, they'll automatically have a business interest and not just a basic, these are the values that we believe in type of interest. So that hopefully will drive the entire industry over the next few years anyway. But let's take a break from our panelists for a minute and poll again our audience and take advantage of such a large audience to ask a question. And so for this particular polling question, we would like to hear from you on how should approaches to aligning insurance portfolios with the Paris Agreement be developed. So again, talking about all these stakeholders and trying to find out how can we come up with a worldwide standard that can be used and applied in a way that then reaches an alignment between insurance companies, but also in the real economy, so that we really have that impact that we are looking for in the long run to reach the Paris goals. And in this live poll, I think hearing from you about how best to reach that goal, who should be in the driver's seat. So is it the insurance company and reinsurance companies? So the industry itself, should it be the regulators and supervisors? Should it be civil society organizations, NGOs, trade associations, or should it be Butch, for example, in an initiative led by the United Nations, right? So how do we best reach something that is really going to get us the answers we are looking for, including the scientific questions, including steering the regulation in the right way, and on all these aspects. And I see that we have a live poll going with about 50 answers, close to 50 answers, where a majority of the public thinks that it should be led by the industry itself. So that is a very interesting answer. And Butch, I hope you can use this answer in the research going forward. I know at Swiss Re we're certainly doing a tremendous amount of work and trying to research these questions also, and in efforts such as the CRO Forum and the paper that they wrote, and input from think tanks such as NATE, and input from our regulators and the trade associations as represented by Jeff. So thank you very much for those answers, and again, do keep voting as we have a few more minutes left. I would like to we have 1 more minute left in this session, and I'd like to just ask all three of you briefly in a few seconds to leave the audience with thoughts on next steps from your point of view and how we can accelerate this transition to a net zero economy as an insurance industry. So maybe I give the word first to Jeff, please.
Thanks, Stephanie. Well, climate change is not self-isolating. It is foreseeable, it is material, and it's actionable now. The financial risks are real, and there is a growing coalition of the willing, which are consumers, investors, employees, talent looking at where they work with firms, and indeed regulators who see the direction of this, and it is only going one way. So I welcome opportunities like this forum tonight to expand the understanding and knowledge of that, and encourage more people to act. Thank you, Stephanie.
Thank you, Jeff. Nate.
Yeah, thank you, Stephanie. I think the first step is for insurance companies to set science-based targets on their investment and lending portfolios, with the understanding that underwriting is yet to come. We still need to develop methods there, but as was noted, all insurance companies are investors. That would include fossil divestment and decommissioning of the obsolete facilities, as Martin mentioned, but also a large degree of engagement. We find with our work with financial institutions that engagement is really the best option that many financial institutions have to have near-term mitigation impact, to actually engage their investees and clients. That can also be a way of conveying benchmarking and mitigation information. And then finally, of course, development of new products within the insurance sector to support clients in setting their own science-based targets and mitigating their own emissions is a great area. Thank you.
Great, thank you very much, and thank you to the three panelists. Before I hand back to Butch to give the final answer on this piece and then to do the closing words, just wanted to hopefully tell the audience that there's a lot of work to be done, and the more we are able to work together and take action, as Eddie said at the beginning, the better we're going to have this done quickly, and the sense of urgency that Jeff mentioned really does need to be addressed. So with that, thank you from my side, and Butch, I hand over to you to answer the question and start with closing remarks.
Thank you. And I think from our side, I mean, the PSI is already a collaborative effort between the UN and the global insurance industry, and we've heard from our members. So we will take it to the PSI, and the idea is to convene market participants and also stakeholders to continue what we started today. So today, I hope, is something that we can look back to and say that that day was a day when we started thinking of something big. And so that will be a journey. And so that's a commitment that we can take as a next step, practical next step, to take this agenda forward.
Good.
All right. So thank you very much, Stephanie. And I'd like to go back now and simply reflect on what we've discussed today and the whole series with Swiss Re. And I think it would be good to hear from Reto Schnarr-Wheeler, who's the head of Group Sustainability at Swiss Re. Some insights from you, Reto. You've heard the discussion today. You've been there from the start on this whole series on sustainability leadership in insurance. Would be great to have some insights from you before I close with some thoughts as well.
Yeah, thanks very much, Butch. I found it a very useful series of webinars. I mean, initially we wanted to do a real event in Rüschlikon in the beginning of May, but then obviously because of the pandemic, we couldn't do that. So here we are with a series of webinars, and I think it went extremely well. We covered a wide range of topics from the pandemic and the impact it has on sustainability, to sustainability risk in underwriting, the insurance SDGs, and now today the alignment with the Paris Agreement. So quite broad, and but always with a focus on the insurance underwriting side, because we covered the investing side last year already. Today, very interesting, Owais started it on a pretty sobering note, saying that not much has actually happened over the last 5 years, and but then Eddie came in with a more optimistic note, saying that the momentum around sustainability and climate change has actually increased significantly. So I find that very encouraging. Obviously, The awareness seems to be there, but now it's all about action. And action requires commitment, it requires leadership, and that's, I think, what we all stand for, really making this a better planet and helping to achieve this transition. So it starts with transparency and education, and increasingly it goes into business steering and setting the right targets for each individual company, but also for an industry overall. So I find that very, very important. And we were also reminded today that the insurance industry has a massive role to play here, massively leverage on the investing side, but I think often underestimated, probably even more weight on the underwriting side, because if we no longer insure certain activities, then I think that is a clear signal that something is wrong with such a risk or such a business proposition. Obviously, this change also has a regulatory dimension to it, and science has to play a role in here when it comes to setting targets. But I think what is still a bit missing, in my view, is this real sense of urgency. The clock is ticking, we need to move, and we see that climate change is real, and with that we also need to transfer our discussion into the real economy. So there's still a lot of work ahead of us, but we believe it is a mission possible, but it's going to be a hard one. Back to you, Butch.
Thank you very much, Reto. And from my side, it's very simple. I think throughout this series, we've seen leadership from different market players, but also stakeholders, be it regulators or civil society. And I think matching that with a collaborative effort and the right ambition are ingredients of success. The one thing that I would like to highlight, and I agree with Reto and Jeff, is that there is a need for urgency on this matter, because if there's one thing that climate change presents that is quite different, is the temporal nature of climate change, where the less we do now, the more we will suffer later on, and the more we do now, the less it will be catastrophic later on. So I think this is the agenda is really time, and ultimately time is non-renewable, and so it is in our hands to make something of what we have right now. And I think this agenda of aligning with the Paris Agreement will strongly support the agenda of achieving the SDGs, because if we don't achieve the goals of Paris, it could undermine the whole agenda for sustainable development going forward. So this is, I think, for the series with Swiss Re, while this is the last one, and before I burst into tears that it's the last one, I actually think that we have something to take forward. So I think we have successfully created more work for ourselves through initiatives like the implementation of the Global Sustainability Guide for Insurance, the insurance SDGs that we will be taking forward, and now this cutting-edge agenda of aligning insurance portfolios with the Paris Agreement. So with that, I think I am encouraged with hope and optimism, but a cautious one that we can achieve this collective goal of sustainable development. So I'd like to thank all of the participants for this webinar series. I think we have successfully convened several thousand of people in 4 events, and also our friends at Swiss Re for their support all throughout this agenda. I think from a UN side, this is something that the UN will continue to support along the way, and we look forward to working with all of you in the days and years to come.
A big thank you also to Butch and the UN team. It was great collaborating with you on this series. Thank you.
Thank you very much, and please do give us some feedback if you want to more of these things. Please answer the survey, and I won't prolong it any further. Thank you so much again to all of you, and I think COVID-19 is a big opportunity for all of us to build back better, stronger, and greener. Thank you.
Thank you all. Bye now.